Good morning. Welcome everyone to our live trading room. I'm back after yesterday not being able to make it. That had to do with my electricity not working. And the electricity was actually purposely sabotaged by some teenagers, in fact, that live here in the complex and probably found it funny as a practical joke. I didn't find it that funny, but what can you do? That's life. So, but today everything's working, so let's take a look at the Forex market together. And we'll be doing that with a special theme today, and that is in fact looking at supply and demand and price action. So there would be a focus on that. Before we do that though, as always, explaining the risk disclaimer that the trading global financial markets is considered high risk, including Forex, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So I do thank you for your attention on that. My name is Chris, by the way, and this is hosted by Admiral Markets. By the way, today, later on, we have a webinar, educational webinar at 6 p.m. Central European Time. And it's going to be a bit, I think it's going to be fun and funny because we're going to take a look at the top 25 mistakes. So it, of course, has a serious content to it, but it's going to be funny, I think, which kind of mistakes we all can find together, maybe. So join us then. In the meantime, we're going to take a look at live trading. We'll be focusing a bit differently. This is the usual focus. As I said, there's going to be a supply and demand trading today. Before we actually look at the Forex market, though, I'm going to say good morning to Michal.
Unmuted. Thank you very much. Thank you very much for this wonderful introduction, Chris. It's nice. It's great to have you back here today. Yesterday was a bit challenging for me. It's like everybody tuned in to see Batman and Robin, and all they did was just Robin. So I'm very happy that you're back today with us. And of course, I would like to do the first part of my presentation. Just give my computer a small second to adjust my keynote presentation. There we go. Once again, my name is Michael Onhoff, and I'm a client relationship manager for Admiral Markets. In essence, my job is to create the best possible trading environment for you. If you do have any questions for me, you can always reach me by email, Skype. You can always add me as a contact on LinkedIn. I have left my LinkedIn link right here on the presentation too. And if you have any questions or would like to be admitted to Trading Camp, you can always write to camp@admiralmarkets.com. As well as one of the head camp counselors, I'll be very happy to accept you into the program. Before we speak about serious business, before we see Chris trade on his own account, let's talk about something a little bit different. Since we're all going to be talking about Forex, we're going to be talking a lot about currency pairs. And of course, I wanted to talk about one pair of my own today. Slightly different pair, not a currency pair, but nonetheless, I think it's a very important pair, of course. Let's talk about your future self and about your present self. And those entities are constantly having a battle deep within you. I'm talking, of course, about the present self wants to spend and future self wants to invest. So when you decide to stop eating junk food and quit smoking, maybe put 10% of your paycheck into a savings account, those goals are being set by your future self. Your future self wants to look good, enjoy good health, and be financially stable, and of course have enough money saved to buy a property or retire in a good pension. And I bet that every single one of us have sometimes, set those goals when lying in bed or thinking about life, and of course a lot of us have failed on a lot of our goals. Why did it happen? Well, the problem is that just like some smart people, future self is not very strong. He's a lot weaker than the present self. The present self, has a pair of powerful muscle hands that can buy hamburgers and French fries with all that money you wanted to spend to save, and maybe then enjoy and top up the evening with a nice nutritious smoke. So the battle between your future self and your present self has been fought for hundreds and hundreds of years and has always been extremely difficult for your future self to win. 19th century economists sat on temptation that to abstain from the enjoyment which is in our power and to seek distance rather than immediate results are among most powerful extortions of wealth. And that was said in 1836, and I don't think much changed ever since. Still, if we have to cut down on some entertainment today to live a better life tomorrow, it's very hard for us to do that. So if you put everything in the financial context, your present self wants to spend, your future self wants to invest. So the concept of investment is not only applicable to money, you can always apply to time as well. And you, all of you today, are a great example, because instead of spending or even wasting your time, you have decided to invest it and attended this webinar. Today, your future self was victorious. But it is now very important that you invest your knowledge that you're going to acquire today. Otherwise, it is going to be a sunk cost. So when the webinar is finished, you can apply the concept of investment to where it truly belongs. Once the webinar is finished, you can go to Admiral Markets and get yourself Admiral Standard account that offers you an easy and convenient way to invest into shares or maybe into a whole economy. You can buy contracts of difference on shares such as Apple, Boeing, Facebook, or Exxon, and those are just a few examples. Or if you feel like you would like to invest in a whole economy, you can always long the indices such as Dow Jones, FTSE 100, or DAX. All of those indices and shares are available for you to invest on Admiral Standard CFD section. Or if you like, and if you're pessimistic, you can just short them and see if the market agrees with your prediction. Either way, when you invest, you're making sure that your future self perseveres. And whilst you watch your investments appreciate, so will your self-control, discipline, and financial stability. All of that is an offer when Forex trading. And if you're a bit confused by trading Forex, if you would like to learn more, if you're just a beginner, then invest your time in Trading Camp. The program is going to start once again this Monday. So in order to get admitted, all you have to do is write to camp@admiralmarkets.com. We are doing fantastic things in Trading Camp. For instance, yesterday we had an hour Skype conference with a professional trader. You could have logged in and asked a question. And that is going to be available for future campers as well. It's a 3-week online course. You're going to receive small assignments every day. You're going to receive strategies that were developed by professional traders. We're going to have performance tracking, so you're going to be fitting an online tracking device. And personal coaching is going to be given to you. Yesterday you were coached by a professional trader, and also literature will be supplied. All you have to do is write a short essay on Forex aims, about 100-200 words, open a real account with $10 in it, and send this information to camp@admiralmarkets.com. That's all it takes. Next camp is going to start next Monday. I'm very hopeful I'm going to see a lot of you people there in Trading Camp. Make this first step to Forex greatness. Thank you very much. It's been Michael Onahalt. I'll now pass the microphone to Chris. I'm pretty sure that for the past 2 days, we've all been missing him very, very much, so I'm going to listen to him with great pleasure. Thank you very much, Chris.
You too, Michal. Thanks for those kind words. And if you haven't joined for the Forex camp, basically your trading camp, then I definitely recommend to do so. You can see the many advantages it has. So let's take a look at the calendar and see how that will influence our Forex trading today. And we can see a pound interest rate announcement in 4 hours. So that is something of concern maybe for the pound, and we should be very careful and not trade the pound with that news and announcement so close by. So we can take a look at other currency pairs. Otherwise, light and medium impact news on the euro in the morning as usual. And later on today, we have Draghi speaking and also USD jobless claims. Alrighty, Friday is, by the way, a very light agenda. Nothing, only some yen news. Unless, no, probably I didn't show it actually. Anyhow, let's continue and take a look at supply and demand trading. Now, first of all, before we start, let me ask you a question, in fact. And that question is, how many of you are, let's say, on a scale from 1 to 10, feel comfortable or aware of supply and demand? So 1 would be, not aware of it, not known, unknown factor. 5, you're aware of it, but not. You would like to maybe know some more details. 10 is you're aware of it, you know it, you've traded it, maybe even. From a scale from 1 to 10, how would you rate your connection there with supply and demand? Someone is asking if there's an ECB. Yes, there is an ECB monthly report. It's a medium impact indeed. That's true. Let's see. So 1 being the lowest and 10 being the highest. Whether that ECB, I guess, is medium or high impact, that would depend, on the opinions. It's always, of course, it's always a categorization that someone has chosen. In fact, in reality, it's always a bit grayish, isn't it? Except NFP is clearly high impact. So I don't tend to consider ECB monthly as high impact. I've never seen it as high impact, so I'm a bit surprised that you saw that somewhere. IODA. So we got some answers, but I'm just thinking out of my database, out of my head here. We could be a bit more careful with the ECB still. I mean, I don't know. Let's see. We can think about it. We got some answers. We got 2, 2, 3, 5, 4. Okay. Well, what it all boils down to, a quick explanation here before we dive into practical examples. So bear with me if you are more knowledgeable and experienced in supply and demand trading. A quick explanation. First of all, we're basically, what I use it for, let me start with that, is more of a confluence. So I use it as not as a standalone strategy, but more as an extra confirmation of a potential entry at a fib level. You could definitely traders who only use it as a standalone strategy. What it boils down to is looking for a zone, and I'm going to look at it for a practical example because I think that would make the most sense. Looking for an area, or maybe I can just show you a schematic first. If you have price moving up, for example, and it makes a kind of a sideways move like this, and then continues, then this is in fact a supply and demand zone. The reason why is that you had price moving in from an impulse and continuing after that in the same direction with an impulse. There was no selling pressure in that blue box there, no downside pressure, and basically buyers were not closing their position and sellers didn't step in. So it just went flat. It was a range. If you'd zoom into a lower time frame, the blue box would be a range, right? Let's say this is a daily chart, and on the 1 hour chart, the blue box could be a range, right? But on the daily chart, it's just a small pause before we continue. A zone like that, whatever time frame, in fact, is a support area, a very strong support area, in fact. In that area, there was more demand than supply, and if price were ever to hook back to that area, then basically you have a bouncing area. And the idea of supply and demand trading is that the entry would be anywhere in that blue box. The stop loss would be below the blue box, and usually the best take profit or reward to risk is if you can aim for a 3-to-1 trade. So the risk, that means the reward is 3 times as big as the risk. Preferably, the target is before, with emphasis, this top, because that is a resistance spot, and that could be a turning spot maybe for further downside. So let me redo that schematic. And I'll use green for up, sideways, green, move back, entry, bounce. Stop loss would be below the zone, take profit at a 3-to-1. And that 3-to-1 take profit should be before this top where I have the pink circle. And the reason why is just in case it does this and continues down, if we aim above the resistance or below the support, then there's less guarantee of that target being hit. All right, so that is supply and demand. Is that clear? I see that's one person already left, but I have to explain it so that everyone is at least understanding the concept here. Does that make sense? Okay, I got one clear, two yeses, maybe just a few more. Is there any question you might have? It's pretty straightforward, isn't it? Now, of course, you'll have some exceptions, like how about if you have a small dip here or a small dip here, you'll have real-life practical examples that don't fit within the exact perfect theoretical example, right? Okay, so I got no questions. All right, so let's move on. Price action, of course, don't have to say. That's just we can take a look at candlesticks as well. I combined them. I don't know why I did that at the time. Maybe it makes sense. We can take a look at both. Maybe if we get a candlestick confirmation within the supply and demand zone, for example, it would give even more reason to take that trade, for example. So that's how you can combine them. Alrighty. I would probably, regarding time frames, by the way, yeah, you could use it in fact on all time frames, but logically speaking, a 15-minute supply and demand zone will not have the same strength as maybe an hourly, for example. This is by coincidence the daily chart indeed on the euro pound. Yes. The reason why is that I just wanted to show you that unfortunately we didn't hit the 50 fib. But remember I said that from here on it could be, if we move up, it could be still a good short down to the 50 fib. So that idea worked out okay, but it didn't. Well, it worked out halfly okay. The entry, but not the profit, not the take profit was hit, unfortunately, which would have been my entry, and that's a shame. I was really hoping that I was pretty sure the 50 fib would get taken in, by the way. Just wanted to mention this quickly before we start. But I do think it's still a possibility to go to the 50 fib. I still have that entry order there because this could still be an ABC correction for those of you who like elite waves, even though we broke this top. So I'm still having that entry order there, personally. Let's see. So what will be an example maybe on this euro pound? Why don't we start there? We can go through all currencies and see if there's anything of interest to us. So what we're looking for, it will be relatively simple. Let me take off this text here first, though. I would like to move it away, so I can't grab it though. Does anyone still want the order to see it? That is the entry order I showed everyone on Tuesday. Anyone interested in that still? I'll get rid of it. I can't grab it somehow. How do I mark it though? Not sure how to mark it. I'm trying to click on it. Yeah, that's what I'm doing. I'm clicking on it. Clicking on it. Maybe if I zoom into it, lower time frame. Forget it. I don't want to hold this up. On the center. That's weird. Okay. Anyhow, I thought I could. Doesn't matter. Yeah, I don't know. Usually I don't have a problem with that, but doesn't matter. This 4-hour chart, euro pound. Let's take a look at any supply and demand zone that would be interesting. I don't see any, to be honest. If we look at this 4-hour chart here, and we're trying to find some zone here that would be considered a consolidation area, it doesn't look so. In fact, what we have is we're not looking for tops and bottoms, right? This is not a this is a resistance spot, but it's not a supply and demand zone. We had a down move, clearly. We had a correction, continuation, correction, continuation, but it was all pretty fluid. It was all pretty pretty smooth. There was no zone where price really paused for a significant period of time. It was just impulse correction, impulse correction. Very straightforward in 5 movements down, as you can see. So these are definitely resistance spots, but not supply demand zones. So let's see. How about the upside? That would be for downside potential, right? That's why we're looking here. But how about for upside? Well, upside we can only see a clear impulse up, and we see a correction down. But in fact, this is not something of a zone as yet. It's not a clear structure. Let's take a look at the 1-hour chart. Maybe we see something else. Now you can, in theory, you could zoom into 1-hour chart and you'll probably see a supply and demand zone here. But I prefer to not to go back too much. That's something I want to add. I'll be maybe adding some stuff here and there, because we can go back, I mean, on the 1-hour chart, maybe all the way to 2011, find the supply and demand zone maybe at 82.50, right? And it could still be valid maybe, but that's a bit too far in my opinion, as you can imagine. Oh, one more thing, by the way, regarding validity, I should mention, is that if you have an up move and a sideways zone and an up move, that supply and demand zone will remain active until price does return to that level. But as I said, I don't want to go back too far, but it will remain active. But if the price moves too far away from it, the importance does decrease. And as soon as price goes into that area, that supply-demand zone has been used, and it's over. I mean, that's it. It's only one-time use. Okay. Alrighty. So I don't see here anything on the 1-hour chart. Let's take a look at the daily chart. Don't see any zone in here either. Let's see. No, weekly chart. Weekly chart, this could almost be an entire zone, but that would be only if, for example, we would move out of it and hook back to it, for example. All right, then something like that could happen. That would be an example. So let's move on to the pound. Maybe we can start with the daily chart, for example, and we could take a look at the weekly as well. No. 4-hour chart. 4-hour chart had many of them when moving up. You can see it stalled here, it stalled here, it stalled here. Those would definitely be supply-demand zones. This could maybe be one. It's not as neat. I mean, it's not that great. I mean, we do have an impulse, obviously correction impulse. This zone is not what I would say is an ideal example because we have maybe a double bottom, but the tops are a bit higher than this, so it's not the greatest of examples. How about the Aussie? Let's see. The Aussie, this is, for example, a huge supply-demand zone, although we didn't have a down move prior to that, right? So it's a bit different. It doesn't match that particular criteria. How about the daily charts? Daily chart also quite a big impulse here. Nothing here. This was just one impulse, in fact, without a pause. One-hour chart is very choppy. No, don't see anything there. Let's take a look at the New Zealand. This could be a good example right in here. Or here. Yeah, these zones don't look to be that common indeed. It depends. This is definitely an area where you might want to think about. Maybe I'm being too critical. Maybe I'm looking too much for an ideal example. Let's zoom into, we can see that there was some pause in this up move, but never all too long. So the question, yeah. Let me see if I can draw a box here. It's quite short in time though. This would become a supply and demand zone here if we do move down and then up again. That would be a good example. This in itself could be maybe a supply demand zone, although it would only be, in fact, it's more a reversal in fact. On a 1 hour chart, this is a typical example. Let me use these green lines to show you here. So if when price got back to that zone, it couldn't break it. So that would be an example, because we have an impulse, duck, and then a move back couldn't break that. By the way, the second time, it still could be a zone of resistance. I said only first time it's valid. The second time as well, but it's just less strong. All right, it still could be resistance though. I wouldn't discard it necessarily entirely. So that would have been an example right here. Actually, it didn't hit. It depends. You see, those are one of those practical examples. Do you use this bottom, or do you use a bit higher level? If you would have used this lower level, maybe you had entry here. If you used the higher level, then you had entry here. And if you use the exact bottom, that is, would have been a 50 pip stop, approximately 55. That would mean aiming for 150, reward would be 82, right in here. So that 31 hit here, or it's on its way here. So that was a example recently, at least. This is one as well here on the Swissy. That one could have been used already here, though. In fact, the Swissy might have one here. On the 4 hour chart. It could be 1 hour chart as well, by the way. Oh. So let's move those green lines there. But these zones like that would be typical. Or this, for example. Swissy has a better example somehow. Even this one here, see? Downside, down, hook back. But sometimes price never gets there, right? It just falls, makes a new supply and demand zone, falls. This one hooks back, continues. So for the upside, this could be one. Preferably you have the supply and demand zone right at the top, not a bit underneath, because this one is a bit underneath the top. But that would be the preference, by the way. But it's still okay. Let's see how it looks like on a 1 hour chart. Yeah. So that is the zone. If price were to go there, there's a high likelihood of a bounce. So it's trading a bounce, basically. Now the entry itself could be different, right? You could take a entry level trade right at the top without confirmation, or you can just mark the whole zone as a supply and demand zone, wait for price to get there, and if you see some confirmation of a sort, for example, a candlestick pattern, or you see price moving down, up, down, making a lower high, and then take the next fractal break on whatever time frame you use as a confirmation would be another way of doing that. So you have multiple options how to tackle that. Candlestick, higher highs on a lower time frame, a direct entry. Any direct entry would need, or any entry probably would need most likely need a stop loss below 90.15. unless you really trade a good pin bar, you could use the low of the pin bar as a stop loss. Or if you do trade the higher highs, higher lows, you could use maybe the turning spot as a stop loss instead of this. If you use a direct level entry, right? If you do a direct entry right at the 90.50, for example, then your stop loss has to be at 90.10. For 40 pips, your target is then 40 times 3. It's quite simple. It's 120. Add 90.50 to 120 is 91.70, right? This could be, for example, a supply and demand zone as well here. It is still a strong area right in here. If price were to go there, it is probably a strong rejection level, right? Because that's really where we had downside and continuation. And this is the 4-hour chart as well. So this is maybe more of a 1-hour example here. This is more of a 4-hour example. But if price goes up there, there is a good chance of rejection, and any stop losses could be put above here, for example, which is above 92.80. Also important, by the way, is what I forgot to mention is the speed at which the price moves out of a zone. So if you have an up move and you got that choppiness, but if price like breaks like this, well, then that zone is not really a strong supply and demand zone. All right, and you might want to avoid that one, in fact. However, if price were to move like this, I forgot to mention this, so I'm adding some stuff here. If price moves fast out of it, then that zone is a lot more valuable as a supply-demand zone. Very important. That is critical. And the Swissy has that. You can see that the downside moved very, very fast. So that's one of those criteria you definitely want to keep an eye on. So those are two ideas on the Swissy. In fact, let's see. The weekly chart, in fact, has a third one. Not that anyone would trade it, but this whole thing becomes a supply and demand zone. So if we move up from here and never come back, that would be a bouncing spot. All right, it's not so practical, but so that's the Swissy. Let's see if the cat has anything. 1 hour. This is the 1 hour chart. And let the 1 hour chart is maybe let's look at this one right. So you see it's up. This is quite choppy. The highs. It's not really what for. Let me more. It's like a triangle. Maybe it's, I don't know. It's not. Excuse me. It's a bit messy. This one is very neat. Do you see that? This one is neat, and it had a good for an hourly chart. Good continuation, right? How many pips is that? That's a good impulse. You have to, of course, measure the, how do you measure if an impulse is good or not? Well, you can just look at the price action and the angle of price moving. If price is moving like this, like this, it's not good. This is pretty steep angle, right? So that is a good supply-demand zone. So anywhere between 103.80 and 103.65 We could see probably a bounce on the CAD. So an entry at 103.75 with a stop loss at 65 would be a target at 104.05 for 10 pips. That would be the idea. So we can mark that zone, or like this. Is there any other way? I thought there was some other way to mark a zone. Let me see. Not sure where to find that. Anyhow, that's the idea. Let's see, this is the 4-hour chart. In fact, the CAD probably has a supply-demand zone on the daily as well here, right? This whole zone. Impulse, sideways box, impulse. It's definitely looking so. So we can see if price were going back to this zone, that would be qualified as well. This is a top, all right? And the reason why this is a top is because we have an up move and then a down move. That's not a supply-demand zone. This is maybe a sideways box, but it would have to have had a downside like that. So this doesn't count. And everything in here was pretty fast. There was no sideways pause on the daily at least. So there's nothing there in that downside. So there are two areas here, the 1 hour and the daily here. Let's see, maybe this weekly one had a here one. You can see it bounced off here. So that was, yeah, that's about it. So that's the two examples as far as I can see on the dollar CAD. Let's take a look at the dollar yen. This is more like a bull flag, in fact. This is a bottom. So these are not supply and demand zones. All right, just in case you're wondering here. This is an up move, correction. This is a bottom. This, in fact, is a bull flag. So those two don't qualify. Not every correction is a particular example for this supply and demand trading. So those two don't count. The downside, this could have been a supply demand zone, but we actually spiked to the upside. There was one here, in fact, maybe. It's very small, maybe that's more a 50-minute one, in fact. Because anytime we got a downside, sideways move, but a spike up instead of a continuation down, then it doesn't count. Let's see. maybe this one was one on the 4-hour chart, but the problem is that it was already used. We had downside, downside, and maybe a box in between that. And you can see that once price went back to that, it rejected off that level to the downside, right? So that was an example, but isn't that valid for future value, or it doesn't have that much value for the future because it has been used. But it still remains a top, of course. 98.70 is still a top, and therefore resistance, but not because of this zone. Okay, so otherwise, if we go more, the thing is, if we go back maybe more into the past, we'll find them, but that is relevant for price. I mean, here we have a bottom. Basically, what we'll be looking for is, let me move these red lines. We've analyzed from here to here, right, and looked at the price action and tried to find any supply-demand zones. And if we look at that zone, we don't see any, right? Let me go through it again. Let's go through it together. Downside, correction, downside, correction, downside, correction, downside, maybe this zone here, he said, correction, back to the zone, rejection, continuation. So everything is a movement except that one, which has been used already. So all price action from 160 to 96.50 has been already kind of checked off and has been reviewed, and we don't have anything there. That doesn't mean there's no supply-demand zone above that level or below it. But on this 4-hour time frame, that means we would have to scroll back to more into the past than we can see on this chart, and that's something I don't do. I know people who do go back in past, if you know what I mean, and keep scrolling until they find price action that's either above 160 or below 96.50, and then try to analyze this. Does this have any supply-demand zones? Yes, maybe this has it. So they would mark that zone on the chart. Maybe this has it, for example, or maybe it doesn't, whatever. If it does, they would mark it on their chart. As I said, I don't go back that far normally, but I'm not focused on this type of trading as a primary source of trading. It's for me more of confluence, as I said. So once they've looked at this zone, they would say, okay, I've checked that price area, and then move forward and look for the next price zone that would be price action that would be either below or above that red line. So this, no price, no supply and demand zone. This is a supply and demand zone, but it has been already used here. So not important, right? Skip it. Next one. This is a supply demand zone, but it has already been used here. That's an excellent example, in fact, of one right here, right? Price dips and finds support. That's maybe a classical example, in fact. All right, so that's what they would do. Day chart. This is really one of them, but I mean that's way far from here. Maybe here is supply demand box. This is more a triangle. This is a bull flag. Basically, we're trying to analyze corrections. This is more a zigzag. Zigzag. And this is just choppiness all around, really, so far. So no, nothing there on that time frame on the yen, is only lower, right? Lower there. This was one here. Other than that, maybe down here was one. You can see maybe. Sometimes it's okay to cut through a wick, just like with trend lines. Let's see if the pound yen has more examples. So let me take all these lines first of all off because we don't need them. And let's start with the 1 hour chart. So this one is a good example where I have the green box there. Or it's a decent example at least. Price came close to that zone, didn't touch it quite yet. So it could still be valid, I would say. But it came very close, as you can see. Other than that, this is a top, of course, because price was moving down, up, and then down. So that's a correction. So this does not count, nor does anything in here count on the 1 hour chart. Maybe on the 4 hour chart, because if we look at the 4 hour chart, we can see that this could be a zone as well, right? Potentially. Let's take a look at that. Let me change the colors maybe so you can see which one I'm talking about. I'm talking about the magenta. There's one thing though that makes it not qualify, in my opinion. Does anyone know what? I'll test, give a test. Nah, just kidding. Anyone know the answer? So the question is, why does the magenta supply-demand zone here, potential supply-demand zone, why wouldn't that count? What is missing in this picture for me to say, okay, that would be a decent one, just like the red box on the 1 hourly chart would be good. Does anyone have an idea? I can see it's good I asked the question because I'm not getting an answer. Adrian has an answer. It spiked up. Okay, understand, Meredith. Well, thank you for letting me know. For those of you who came late, we are looking at a specific type of trading, at supply and demand trading. And if we find an example, we'll take a look at price action as a confirmation of entry. We found a few examples on, I think, the dollar CAD and the dollar Swissy. I think that's it, the dollar CAD, dollar Swissy. Basically, supply demand zone is a consolidation zone, specific zone consolidation where you have, for example, an impulse, a range, and an impulse. If price were to hook back to that range, supply-demand traders are taking entries here in that previous range for a bounce trade to the upside. For those of you who were later in here, that's the idea. So they use those range and consolidation zones as a future entry after price has first moved away. So Adrian says it spiked up. Does anyone agree with that? Let me rephrase the question. Would anyone agree with Adrian's suggestion that it spiked up? And I think what Adrian is pointing to is this spike up here, right? Because we had this zone in here, it moved down, and then it spiked up. Is that a good argument, you think? Yes, no? Okay, I got one no and one yes. Meredith probably thinks no, then in that case two. So we got two no's and one yes. Anyone else want to throw in their weight in this very important election? Come on, folks. I know it's early, but you only have to type a Y or N. No sellers out there? Okay. No one's buying the question. Alrighty. It is, in my opinion, Adrian is getting nervous. Yeah. The answer is yes. I agree with you, Adrian. Yeah. Great job. Good stuff, Adrian. I agree. It's not an impulse here. Not a big enough impulse, really, because it's just one candle. With an impulse, we really want to see something like one on the hourly chart here, like something like this. This is an impulse. You see this, where we have multiple candles like that? That is an excellent one, right? That is a firm continuation after a sideways move. Perfect. That's what we want. 4-hour chart, you want to take a look at the relationship as well. We got a tremendous downside here. We got some sideways move in here, and then we just have a candle sticking out. Look at the relationship in a way, right? Doesn't match up. So great job there, Adrian. So ask more questions. I hope, because it doesn't make sense to go through all the charts if at the end of the day you couldn't be able to do it yourself. And it really is a pity if you wouldn't be able to do it, because it's not, as you can see, it's not that, it's a very relatively straightforward method. It's an easy method. It's a set. You can definitely treat it as a set and forget type of trading. Absolutely. Because it's easy to scan quickly. I'm going a bit slower now, also to ask you to show you some examples. In real life, you would probably not look at all time frames either. So that is the advantage of it. Here is maybe a supply-demand zone, right? Let me zoom into that. Here was one. In fact, it moved away, hooked back to it. So there was one here. Maybe this whole box could be seen as one. If we zoom in, it doesn't look that good as it was when we zoomed out. Let's check all of this price action up. Basically, this was a supply-demand zone here. But it has been used, you see? Right here. So we went up, sideways, continued up, hooked back, and bounced off that supply-demand zone. So that one is used. So let's continue. This one doesn't count anymore. So let's continue now with the next move. We did that here. We already looked at that. Up. Up. No pause, right? We're looking for pauses. This one could be a supply-demand zone, but it isn't. Does anyone know the answer for that? Adrian has a good question. How many candles does it have to qualify as a supply-demand zone? So how many candles must be outside of that, minimum number of candles? I don't have a minimum. Maybe I'm not, but I'm not the top specialist in supply demand zone. So maybe someone who's really focused on it has that, but I'm not aware of it. What I would look for is kind of like a couple of candles at least, and also the length of the move especially. The length of pips. Yep, great job, Adrian. Adrian has the answer, folks. Adrian is winning this contest by a mile. Someone has to step up. Indeed, we had a downside first, then we had kind of a zone here and an upside. One could argue, though, that this was up here and then we had a zone like this and then up like that. And we did get a bounce when we went move down. We did get a bounce there, right? But good job. That is the answer. If you look at it from this angle, it was not good because of this, right? If you look at it like this perspective, it would be okay. So it sometimes depends where you exactly. That's the thing. What I said, the theory is very exact. The practice sometimes isn't, because do you incorporate this bottom, for example? If you would exclude that wick, then you do have this zone. If you incorporate that wick, then it's not really then it's not a supply-demand zone. And you can see how a detail like that changes the perspective. So if we include the wick, it's not in the supply-demand zone because of what Adrian said. Exactly, it went down. If we don't include the wick, then it could be marked as one maybe. Although, in fact, if you look at this, the start of it was very slow, and I only had one candle. So even then, if you exclude the wick, it is not the best of setups because it had a very short run up, didn't it? Well, we should include maybe this part here. Yeah. A toss-up. Basically, it's indeed a particular breakout, indeed, but it has to be flat. It has to be it can't even be a flag. No, it has to be flat. It has to be a box. It has to be like a pennant or totally flat and then up. And then we're not taking the breakout, but we're waiting for the hook back to that same zone and taking the bounce back to the upside, basically. It's a specific type of formation, indeed. So, for example, in theory, you could have down, sideways, down, up, sideways, up. You could be a seller right in there for 3-to-1, and you could be a buyer at the lower supply-demand zone. Right? That sometimes can happen if you have a supply-demand zone on the downside and one on the upside. And hopefully it does this. Doom, doom. Alrighty. Let's see. Anyhow, I forgot what we looked at. Oh, we were looking at. Oh yeah, we looked at the 1 hour already. That did have one, right? Let me put that back. We looked at the 4 hour. Let's take a look at the daily. The daily chart here. It had up. You see, these are all. There's no zone in here. All the candles are basically moving up or down. So that's an impulse. It's not a correction, not a consolidation. I can zoom out a bit to see. This is one right in here. That's a beauty. price never hooked back to that, so it's still valid, but you know, that's far away from here. Let's see. Yeah, that is about it. Let's take a look at the weekly chart. Weekly chart, you can consider this one to be one. Let's see, weekly chart. This could be, no wait, I almost wanted to say this one could be one, but that's not true because as Adrian pointed out, we got a downside and an upside, right? That doesn't count. On a weekly chart, maybe here, let me see in the daily. At the weekly I'm looking at this spot. Anyhow, it's a weekly, so maybe no one really cares, but this is a weekly one as well here. Maybe this entire zone, if you know what I mean. That could be one right there. Right there. Right, that would, it's not a neat zone, but that could be one. Anyhow, it's so far. Let's take a look at the next one. Maybe this is getting boring, but we can do something else if you want, but we got only a half an hour left, I guess. Let's start with the 1 hour chart. Here is maybe one, right? Now, this is one of those examples where you have a very big impulse sideways. It did have an impulse down, but the angle was a bit weaker. You see that? So I would definitely say it is a supply-demand zone, but preferably it would be something like this. But it's still okay. If the angle would be something like that, that would be good. By the way, Adrian, what do you mean with webinar Monday? That's Torotola's webinar, right? Monday at 6 p.m., you mean? I don't know. I didn't, it was canceled? Okay. No, I have no idea. Didn't know it was canceled, in fact. Maybe he had electricity problems as well, just like me. No, I don't know. I'm just kidding, of course. It's quite annoying, by the way, if that happens to you. I was put on the light. It was 4:45. I get up early. Light works. I go to the living room 1 minute later, and the light doesn't work. And I saw people. I heard noises on the corridor and saw light. And I was wondering, who in the world is talking at 4:45 in the morning in the hallway? I almost wanted to take a look. But I thought, ah, forget it. And in fact, those were kids. Those were kids talking, and they were messing about with the electricity box. Crazy. So that's why we didn't have a webinar yesterday. Let's see. You know, the thing is, once you, let me say it this way, once you, it's to minimize the time of scanning, once you've looked at this part, identified this as a supply-demand zone, we see here there's nothing. There's one move down. There's up, down, there's nothing there, right? There's nothing here, so we can then say, okay, there's nothing below here or above here. So is there any other price action that we have to take a look? Maybe at this price action, right? Well, here's a wick. Here are wicks. And there was a small one up in here, but that has been used definitely twice. This is a top, so nothing. So that's it, in fact. 4 hour chart. You can go back a lot further, but as I said, I don't do that. 4 hour chart. 4 hour chart is really a lot of spikes up and down. The EJ was spiky, right? So nothing we can do about that. Here too. Let's see. This one was a supply demand zone maybe, and it did bounce back up. So that is an example, a past example, unfortunately, but I don't see anything otherwise. Day chart, let me get rid of those lines, otherwise it will be too much. No, I don't see anything. Maybe let's take a look at the 50-minute world otherwise. Maybe we see it there quicker. Well, this could be one maybe. Let me show you. Right, we do have an impulse here. This is a zone, and then we do have an impulse. So that would be a 50-minute example. On the euro yen. All right. So that's something we can keep an eye on. We're running out of time now, but maybe I should have looked at 50-minute world more. I do think we have some examples maybe here, in fact. This is the odd yen. Right in here where I have the magenta lines, it's not a daily, it's not a 4-hour, it is a 1-hour, but it's a pretty strong one. The reason why it's pretty strong is because of the price action. It's being so impulsive there. And this was a nice pause. So I think that is a strong one. So that's something that would make sense to leave on the chart. And if price gets there, you know that could be a bouncing area. This one probably was one as well, border case, but that already, as you can see, price has bounced, has used that. So that's not valid anymore, right? That's not a valid one for current, for future. That was a past example. Let me see. So that's one example for upside. Let me see on this down move here on this 4-hour chart. Maybe this one. That one has been used though. You see it's down, box down, hook back, continue. So that one has been used. Take a look at the 1-hour chart again. Yeah, there's no supply demand zone if something like this is happening. If it's all chopped like that, nope. You're not going to find it. There could be one maybe here at the tops. Something like that. We do have an impulse, sideways, some impulse. Now, if you're very precise and look at it, you can see a hook back here. But that's just, that's okay. If it still hooks back a second time, that would be okay. I'm not talking about smaller hookbacks like that. That wouldn't invalidate the whole supply demand zone if it's really recent after that. If it would touch here though, for example, that would be different. You want to see basically one move down and any hook back after that, that's the one that counts. I got a question regarding if it would be possible to build an indicator to draw a box automatically, like yeah, on specific areas. Not sure. Well, I think that it's possible to draw a box, but I'm not, no, I don't know where it is. Is this it? No. No, that's the channel, of course. So one example was here, this zone right in here. We had an impulse, sideways box, down move, and we hooked back to that same sideways box and moved down, right? It's not valid anymore, though. This is not a supply and demand zone anymore. This, where the green line, where the green circle was. And the difference is, downside, sideways, downside, and then we got a spike up, top, downside. Therefore, the second one isn't anymore. Shapes, thank you. I thought it would be somewhere up here, but I'm still looking for something else. One that has like grayish X's through it. Anyhow, this is definitely already helping. Perfect. It's very clear. Maybe I'll just clear the, change the color though, right? That would make sense. Maybe to a, something like this. Yeah. Yeah, that's the best to use this style. We'll do that in the future. Yeah, that's great. Thank you so much, Meredith. So that was one of the past. This one is a typical example. That's a great example, in fact, on this euro odd. Right in here. So we can extend it like that. Price goes back to there. That's definitely a supply-demand zone. So look at that impulse. Boom. Huge. That's one right there. That's one right there. Right? But they're further away, unfortunately, in this case. That's one right there. So there's a few examples. Unfortunately, on a higher time frame, maybe the 50-minute chart. Let's take a look at the 15. No. So we're running out of time here. Let me answer some questions. Or do you have any questions, first of all? Yeah, you have two entry a couple of entry methodologies. I mean, if you really want to trade supply and demand, you can actually put an entry order, pending order, anywhere in that zone, as long as the stop loss is about, let's say, 10, maybe 5 to 10 pips, depending on the time frame as well, above or below the zone. So, for example, if we use this green zone example here, we had downside, green, downside. A pending order could be anywhere in that green zone as long as the stop loss is above here. For an upside example, you would want to see up sideways zone up. The entry could be anywhere in that zone, but the stop loss would have to be below here. That is supply and demand entries, basically. And you could plan that and put the entry order there. If you want to use it as a method of confluence, you could use it to give you a heads up. You can make it green like this, cross it over your chart, and if price gets into that, you know, hey, this is a supply demand zone. So you're your interest is heightened. And then if you see a price action signal, like a good pin bar, engulfing candles, after price has hit that zone, well, then that could be your entry signal after confirmation. You don't have to, maybe you could use a different stop loss. You could maybe use a tighter stop loss and use the candle high or low instead of that zone, right? For example. The stop loss, how much the stop loss should be outside the zone? Well, it depends on the time frame. I mean, if you're looking at a daily, you might want to think about 15. This 50-minute chart, maybe 5 to 10, not more. I mean, 5 is probably more adequate. In this case, you can see price went through this level by a pip, 1 pip, right? So you don't want to go 1 pip above it, but if you go 5, it would be enough, right? 5 plus spread, of course. If you're on a daily, you wouldn't maybe want to use 5, but maybe 15 or 20, maybe 30 even at max. Not sure what your question is, Iskrin. The entry should be above the zone. I'm a bit confused. In this case, you wouldn't want to have the entry above the zone. You could have the entry in the zone, but you could have the entry somewhere at the top of the zone, for example. Right? That's another way of trading it, though. You could trade the reversal and wait for example, as indeed a higher lower low, for example. So you see this up move here, and wait for example, a break of a fractal like this to enter with a stop loss here. So you're waiting for the turn. That's another way of doing that. That's the third method, in fact. We talked about 3. That's not what you mean, Iskrin? I thought you meant here. Okay, then I don't know what you mean. No, please don't be sorry. I value any feedback, in fact. I just don't know what you mean. That's the problem. So maybe you mean here, above here. In fact, that is a breakout trade. That's not supply and demand trading, but maybe that's not what you mean. For those of you who do wonder why that is not a good entry here, the reason why is because that's a breakout trade. If it does break out, then hook back, then this would become a supply demand zone for upside, right? So this is a breakout, and this is supply demand. Okay, sorry, it was a question? Okay, understand. Not sure if that doesn't matter. No problem at all. I just misunderstood. Let's take a look at this. So that's the workings of the euro odd. Supply and demand, sorry. Someone asked about the pound, by the way. We didn't look at the euro, though. Let me get rid of this Ichimoku quickly. I would consider this to be a supply-demand zone on the euro, in fact. Anywhere between 135.40 and 136 looks like a supply-demand zone. Now, it depends on how far price will move away from that zone. If it bounces to the upside here right now, then I would be more cautious of that. It doesn't look that great, that zone. If it first accelerates just a bit more and then bounces, it would be a better one. You want to take a look at the relationship of the size of the zone to how much price has moved away from it. That's now about a 1-to-1, which doesn't make the supply-demand zone that strong so far. This one is a good one on the euro dollar. That's a strong one. Wait, I forgot to use those boxes instead. Alrighty. Someone asked about the pound analysis. Basically, I'll show you what I think regarding Elliott waves. So I'm going to go to my own wave analysis, go to analytics wave analysis. Sorry for this blunt promotion of my waves. And if you look, I think personally that either this is an ABC, which I think is the primary count, and we're getting our correction to the downside. So if we look now to the 30-minute 1-hour chart, what I'm thinking of this downside is a potential 1, 2, 3, 4, 5, and in 5 we're making a 1, 2, 3, 4, so we could probably finish the 5 around 158.40. And this is the 8-hour chart on the pound dollar. You can see this is probably an ABC, and we're now going to make some correction to the downside. So with that said, I think one more downside is likely, personally, but it could happen from the 382 or 50 fibs. So I'm still waiting if the price can make that bounce up to that fib level and looking for a rejection there, in fact. I would take an entry order. I'm just looking for a rejection signal there. We got maybe double bottom or triple bottom. In any case, there is some resistance support here. Maybe we'll get a shot up to that level. If we don't, and we do break below here, I'm not that interested in it, but it could be a potential fall maybe to, what did I say? What was it? Let me check the target. 158.40-ish. 150.40. 158.50.40. So that would be another 60 pips maybe here. But preferably would like to see if the price can make it up to one of these fibs. Let's see. I'm not sure. Oh, someone was asking for the euro yen. If I missed any other question, please let me know, because I think I answered all of them now, as far as I'm aware. I think the euro yen. Oh yeah, the euro yen. I promised to talk about it on Wednesday, right? And I forgot it. Well, I didn't forget it, but it wasn't possible because of the electricity problem. So let's do that now. What I see personally is a 5-wave structure being finished on the weekly or daily even, right? And within the daily you can see 5 waves finished. Moreover, we can see divergence, double daily divergence between the tops. We see a potential rising wedge as well. So double daily divergence plus a rising wedge plus 5 waves finished on the weekly and 5 waves finished on the daily, all those things together make me very suspicious of a potential reversal. And you know that I'm an advocate of with the trend trades and support anyone who is trading with the trend because I think it's more worth our energy. But in some cases, some cases are so, well built that that is definitely a potential reversal signal. Potential, you never know. But it has the hallmarks of it. If you then zoom into the 4-hour chart, we can see the downside pretty corrective as well, though, right? And we're still at the bottom of a potential trend line. So we'll have to see. We can move up to correct that downside and then maybe move down again, for example. But those are the main things I wanted to show you on Wednesday because of that euro-yen potential reversals, reversal signals. Regarding the supply and demand, let's take a look at the 1 hour. I think we already talked about that. In fact, sorry, we had a zone right in here. We talked about it, so never mind. So let's see if we can break out right in here. Maybe there is a small breakout trade up to the upside, but I wouldn't do it as yet. I would rather wait for maybe this break and then the next bull flag. And then maybe we'll see resistance in here because of that divergence. Anyhow, we've got one more question, great question. If I mark the supply demand zone at 1 hour chart, does it work? I think work properly at 50-minute chart. Well, let me say it this way. I personally have never actively used it on a 15. I have been told that it works on all time frames. My personal experience and my personal usage of the tool as a confluence together with fibs, I use it on the 15. I use it on the hour. Sorry, I said 15. Excuse me. I use it on the 1 hour and 4 hour charts. So I don't have any personal experience with the 15. But I would say I've been told that it works sufficiently on all time frames. So I would say the best is probably to test it yourself then with the demo and see how it goes. Write down, why maybe one trade worked and one didn't, and optimize it, and then see if the result is positive. Well, that's rounds it up. I hope you found it interesting. It's maybe not it's kind of a very specific topic, but I think at least you've maybe seen a practical example how you can, of a new type of strategy maybe. Or if not a new strategy, then a new, way of looking at the charts that can give you that extra confluence and confidence as well to take a trade at a particular spot. And sometimes it could just help if you have some doubts and you see maybe a zone like that could give you that extra confidence there. So thank you too for being here. And well, we have one more webinar, by the way. Let me show you that quickly, and then we'll close it for today. And that's go to education, go to Admiral Markets site. First of all, go to education webinars, and then you can sign up for today, which is the top 20. Well, actually, we made 25 top 25 worst mistakes to avoid in Forex trading at 6 p.m. Central European time. See you all then, hopefully, and good trading in the meantime. Cheers, everyone.